Good morning, everyone. Man, it is a great morning. All right, you guys. Well, I was on here earlier this morning. So, for those of you who saw the first video, um, you should have seen where we postured ourselves earlier. And so, I'm still in the same trades that we were from the few hours ago. We were on here about 1 this morning, LA time. We were on for the Euro News, and now Euro News or US News, sorry, just happened around 7, I believe, or somewhere around there. And market didn't move much since the last time we were on, other than this whipsaw that we have here. But as you can see, the last gentleman that we had on here was asking me if Kiwi was bullish. And I told him no. I said, but are they going up? Yeah, but it's not bullish. They have a ways to go down. So as you guys can see, this is my third trade I put here. I always put a standard lot, and then when it comes back to my area, I throw another standard on there because you're gonna give me my money for my time. But anyway, we were using the Tamacha indicator here, and we found this level here at 59.13, also at 58.94 was a sell stop. So if you guys are interested in any of these, you can go ahead and do so. You can put a sell stop in here. This one already triggered. But we're going to find an entry right now, actually. So the way we use Tamacha, it's very simple. First, I'm going to show you P2P here. So let me turn off Tamacha real quick. P2P is a pivot-to-pivot indicator. And I'm not going to bore you too much. You can watch the previous video. The end of the previous video kind of shows you how to use this. But I already set up a Kiwi dollar trade. So here it is. So this is the P2P indicator here. If I turn it off, turn it back on, all it does is, not all it does, it's very powerful, but it captures curve. Curve analysis is just where is current price, where is the pivot that current price came from, which is this pivot high, and then where did this pivot high come from? It came from this pivot low. So we have our A, our B, and our C, or some people call it 1, 2, and 3. And so I'm anticipating price action coming down. It came from this pivot. It's on its way down to this pivot. And so when we put the pivot high here at this price here, put the pivot low down at this price, this is the what we call curve that we get. And it shows that there is supply up here. If you guys notice, it highlighted supply. If I were to turn this off, notice how this candle, the supply candle, is no longer highlighted. But if I turn it back on, notice how it highlighted it there. It also gives you your buy orders, your sell orders, and all P2P does is it sets you up for the curve, whatever that curve is. So once you use P2P, it's only telling you what the trend is, which is down in this case. And so this is where you should have gotten in. Price action is already broken down from there. You can see at least 4 times here. Let me go ahead and adjust this. I don't like how high this pivot is. So I'm going to go to the point and figure is how we fine tune our pivots, because point and figure gets rid of the noise. And I'm going lower than the daily, and that's important. You got to have at least Pro Plus, I believe, in order to see point and figure less than the daily chart. But don't quote me on it. You got to check for yourself. So I knew it. So this pivot high was off. If you guys notice, this is the pivot low, this is the pivot high, this is current price. So we got A, B, and C. So what I want to do is I want to snap it on here. The reason why I'm using point and figure is because it gets rid of the noise and it allows me to fine tune things to the prices that were actually used, rather than all those wicks and unfilled orders. This is dealing with just the field orders. And so now that I have that, it adjusts all my numbers for me where I should get in and get out and all that good stuff. Because I'm on the 10 hour and there's no noise on here, when all those candles come back on the chart, I need to be on a higher time frame in order for me to see the pivot high and the pivot low. And I'll give you an example and then we'll move on. So since I'm on the 10 hour, I need to go to the next time increment up from the hours, which is the days, and use also the same numeral. So it'll be, instead of 10 hours, when I go to the Japanese candlestick, I'm going to use the 10 day. So I'll go switch it to the Japanese candlestick. As you can see, I can't see any longer my pivot high and pivot low. Why? Even if I reset it, I still can't see my pivot high and my pivot low. The highest I can see is my sell order, and the lowest I can see is the TP2. That's because all these candles in here that are noisy, they're not included on point and figure. So to get rid of all these candles on here and make it look a little cleaner like point and figure, I just need to go higher on the time frame so that I have less candles. And then it'll bunch all of these little candles together. And so that's why I told you I would go to the 10-day. So let's go there. When you go to 10-day and then you zoom in, you see how you can see everything there? Everything's there. And you guys are free to ask me any questions you want as we're going through this. But as you can see now, so price action has come up here. It would have hit this high here. We would have gotten in on this if we were in this trade back here. We already got in earlier, me and my crew already. So this is just a refresher of what happened. So as we were trading and going down, price action came down here. Look how it hit our TP1 perfectly with this candle here. And once it hit TP1, it turned around and went back up to our original sell order. Came back down to our TP1, went back up to our original sell order, down to TP, or actually our mid pivot, which I typically use as a TP2 to shave. So if we had done that, then it would have come back up again to our same sell order. So, and then it come down and notice it's been playing around here, our TP2. And so I put a sell order here, and then I put some sell stop orders here. As you can see, one is already triggered, or three have already triggered on the short. And that's why I said we have a little ways to go down. Now, if I go to the 1-day, for some reason I put a 1-day here. Oh, P2P highlights another demand zone. See that? So on the 1-day, another demand zone gets highlighted. So we may want to consider a TP at the beginning of that demand zone. Right there, 58.39. 58.39 on Kiwi dollar. All right, so let's go here. You guys can jump in on a market order if you want. I was already in there. It's just now clearing it. I'm going to be getting out at 58.39 right here. Also, if it pulls back, it should pull back to 59.85. I'm going to show you why. Now let's turn on Tamasha here. So P2P, the purpose of P2P is to find your curve analysis. Curve just means going from the pivot high all the way around and down to the pivot low. That's your curve. Halfway through the curve, you have mid pivot. All right. Here's what curve looks like. It looks like this. This is actually called a curve tool. So this will be curve. And then if you can see, the halfway point is mid pivot. The idea is that anything below the halfway point of the curve, you should be focused on shorting. And that's what you can see we're doing here. Sell limit order, sell stop orders. Anything above mid pivot, you should be focused on buying. That's the idea. You can see that right here at mid pivot, what happened when it got here? More buyers kicked in and it went up. So it just goes to show you curve actually works. So the purpose of P2P is to identify the direction of the trend that current price is in. So wherever current price is, it'll tell you if current price is in an uptrend or a downtrend, and then it'll give you where to get in and where to get out. It just does setups. If you want to jump in the middle of something that's already set up like this, you need to go to Tamasha's, and we turn that on like this. And so then you'll get this here. Now, looking at this, I'm just going to stay on the 1-day just to make it simple because it has a lot less candles. Actually, no, I'll let you guys see how I got this down here. So I got this from way back here. So I'll just use a current one. That'll be more fun for you guys. So all I do is, if you guys can look here, let me get rid of some stuff. So we have the white line right here, which we call the God line. And then the blue one is the guideline. And then we have hiking smooth right here. These candles are called Heikin-Ashi smooth candles. So if I kind of get rid of the Heikin-Ashi here, and you guys can see here the guideline and the guideline have crossed. All that means is that the short-term trend, which is the blue line, that's the guideline, it kind of matches the candles. And so it kind of goes along with that, the candles, and it gives you a current trend. The white line, the guideline, it is not as closely related to the candles as you can see. It's a little off from it. And that's because it's giving you an average over a longer period of time. When those two cross, kind of like an oscillator and an indicator, when the information crosses, that's why you see so many people using those, not an oscillator, indicator, sorry, moving averages and oscillators. When you see people using those two together, they're waiting for the two to come up with the same answer. Think of it kind of like that. That is not what this is. We have over 1,000 lines worth of code inside of these proprietary indicators. So I'm just trying to simplify it for those who know a little bit about trading oscillators and moving averages and stuff. And so it kind of gives you an average. Oh, you know what? I got a great idea. I'm going to show it to you. So if I go to a Kiwi dollar, if you guys go to Kiwi dollar, you might be able to slide this up and down like this. But if you grab it and move all the way up, you guys will see something called technicals. So if I click on technicals here, see what it did? Because I'm on the Kiwi dollar chart, it's giving me this. This is kind of what I'm talking about. You have oscillators here, and over here you have moving averages. And so what an oscillator does is it kind of gives an earlier indication of the fact that something's turning. It's a little more sensitive in regards to being able to identify what's actually happening in the market. Whereas a moving average is taking how often something moved over a period of time, and then it's averaging that out as well. And when you bring the two together, then what you have in the middle is a summary or an average. So I want you guys to think of the crossing of the two lines as this right here, as the summary that's bringing the oscillators and the moving averages together. All right. And when those two come together, that's called a point of control right here. That's a point of control. What does that mean? This is where the bulls and the bears are fighting and they control the market. And so what you have here is this telling me that price action above, hey Jackie, price action above the point of control here, the buyers are in charge, and anything below this cross, the sellers are in charge. All right, so all I do, very simple. If you open up your chart, it's going to look like this. And let's just say you happen to open it up on the 3-minute chart and you turn on your Tamasha and your P2P. The P2P is going to give you, as you guys can see, the pivot high and then all the other numbers and stuff. It's going to give you the trend that we talked about earlier when we mapped it out. And then Tamasha is for you to jump in on that. So if we want to jump in on this here, I turn on Tamasha, and I don't recommend Tamasha on any time frame greater than the 15-minute. It works on every time frame. But as many of you know, the higher the time frame you go up, the greater the range that the volatility has to play within. And so if you go too far to the upside with Tamasha, you're increasing the range that price is playing in, and your drawdown will be high. So I don't want you guys to experience high drawdown because you're going to get in drawdown no matter what you trade or whatever your strategy is. Drawdown is just part of the deal because there's spread you got to pay for, and these things just happen. But in any case, point of control is here, and we don't want to use it greater than a 15-minute chart. So wherever we see it crossing, all we want to do is take a vertical line like that, put it wherever the cross is, and we're looking for the very first candle after the cross. And sometimes you got to zoom in. So I'll take the magnifying tool, I'll zoom in, and then I got to get rid of Heikin-Ashi there so I can see. Let me get rid of the point of control too. And there it is. As you can see, this is not in front of the cross. So this candle that I identified with this vertical line, even though from here it looks like it's on it or in front of it, it's not. It's behind it. So it's going to be this candle here. So since it's this candle, I then take a horizontal ray and I snap it on to the close of that candle. And that price is 5,900. What am I going to do with that 5,900? I'm going to sell. I'm going to create a sell limit order. So this will be my fifth one. So I'm going to do 100 and 500. That's how I know it's my fifth one. And 5,900 right there. So I just put another trade in. If you guys want to put this trade in, that's what we did earlier. We were on here 6 hours ago. We had put this price in, and look what price action did. It came up to us. We were green originally, and then look, it started playing around. It went back to our entry, went above it, below it. This is why the last guy said, "Is it going up?" Because he saw it doing all of this, and I said, "Nope, don't let them fool you." And so they did this, and then they started going up. But look how slowly they go up. They take their dear sweet time because they're trying to get you to change your mind. And they went as high. Look at this, 59.40. That is crazy that they would do that. And look, they were on their way down, and right when the news came out, they decided to do a whipsaw. Why? They're taking out stop losses, coming back down. I also teach people that if you have P2P, you can also use the previous TPs that have already been used up as limit orders. And so, had I put the limit order here at 59.26, I think I did. I want to say we did have one up here, and it wicked in there, and then we had this one down here. I think we did. That's why I have 400 here because I already put 4 trades on here. But anyway, you can see here it worked out. Even though they played with us, it eventually worked out because we were patient. So that's what we're doing here. We're putting another trade here, and we're gonna, and you can see it already came down and wicked up and kissed it a little bit, but we're gonna wait for another complete turn. Outside of that, the other opportunity was here because once we find a entry like we found here, we're then supposed to go to the previous pivot and put a sell stop order here, 58.94. We missed that opportunity this morning. Uh, but you guys can still place it because it's around the same area. It's this and then this up here. So I'm going to do that to 58.94. They're not that far from each other. All right. All right. So we got that there. Boom. Look how price action is already pulling back. We're on the Kiwi dollar and we already have a few orders in. I just placed the order to short at 5,900, which is up here, but also placed another one to short right here at 58.94. Which is this one back here. And so if it pulls back, which it should, and it should come up to this one here actually, because of this wick back here, it's telling me it's going to most likely come to the top up here. All right, but we'll leave that there and we'll wait to see what happens. Let's look what other kind of alerts I have. I have my alerts set up here to tell me when things are ready. So I'm going to kind of go through this little list here. Silver, let me get rid of all of my silver, euro, kiwi, pound, yen. Euro, silver, kiwi, pound, yen. Euro, silver, kiwi, pound, yen. Silver, kiwi, rid of a lot of these Aussies. Oh, look at that. You see? Now we got 501. My trade just triggered right now. Look how it wicked up to that level. All right, let's get rid of... I'm trying to clean all of these alerts up because I got duplicates. I don't need all the duplicates. All the cats. Dixie, get rid of that one. Ozzy. Here we go. 1, 2, 3, 4, 5, 6, 7, 8. All right, cool. All right, so let's go ahead and deal with these. The oldest one I have is this one here. You guys see this thing got wicked into? We already got in that trade. So if you guys put this trade, you're already in it. 58.94. And I do think it's still going to possibly get up here. But that's only 6 pips away. So you should be able to hold it. Don't trade more than 2 to 3% of your balance. So whatever your balance is in your account, let's say you got a $5,000 balance on your account. That's how many units you should be trading on your pairs when you trade Forex. Just put 5,000 units as your lot size. And if you're on MT4, it's going to be 0.05 if you're trading with 5,000 units. That's the measurement I use so that you can stay in the clear and be able to ride trades out and ride stuff like this out. That's why when I was in this trade and it went against me because of the news, they pushed it back. Look what they did. The moment it hit my price, what did they do? They pushed all the way back. Why would you push all the way back from my price? That's the question. You're coming down. I already said it here for you to continue shorting, which is obviously what you did. You obviously had plans to go down. But why, when the news comes out, you want to hit me here? You see the time at the bottom say 7 a.m.? The news came out, hits my price, and rather than goes down like they had planned, they want to go backwards. How far did they go back? They went back 37 pips. Now, how many of you don't have to answer, but just think, how many of you would have jumped out of the trade because it went against you 37 pips? And if you can say that would have been you, that's how they make so much money, because they want to catch you emotional because they don't believe you know what you're talking about. That's why when you get these indicators, they kind of help you and give you an odds enhancer of what to look at. And if everything is pointing in the right direction, you jump in. All right, so let's go ahead and take a look at dollar CAD. Again, this was an entry we did earlier this morning. It didn't work out for us, but we held the trade, and now look at us. We're in the green. So what am I going to do with this information now that it already took off? It said that right around 5 a.m., dollar CAD was uptrend bias. Here it is, 4:50 something a.m. This is what we're talking about. So what I would have done with this chart, let me show you guys. Let's act like it's that time again. So let's say you guys got this alert here. Or you got this alert right here. I'll show you how to set these alerts up. But what would have happened is it would have recognized the pivot low. It would have identified the uptrend signal, which is a second sign that is turning. So your first sign is a pivot. That's always a sign that the market's changing trend. And then the indicator gives us a sign once it sees that candles are creating higher lows like it did here. Then it creates an uptrend signal. When it creates more higher lows, it then gives us a sign for an uptrend confirmed. And then if your Heikin-Ashi is on and it's green, then what's going to happen is it now has what we call the 4 horsemen. It has the pivot low, the uptrend signal, uptrend confirm, and the green Heikin candles here. The last thing you're waiting for is for the guideline and the guideline to cross. Once these two cross, you now have 5 odds enhancers or 5 confirmations that this thing is going up. So what do you have to do now? The first thing you want to do is place a stop order up here. just in case it breaks out to the upside. So all you do is find the previous pivot. So in this case, since it's pointing to everything up, then you want to place your buy stop order first. The second thing you want to do is place a buy limit order. Now, hear me clearly. I did not say market order. I said limit order. There's a reason why I'm saying that, and I'm going to show you. A limit order is not a right now order. A limit order is a later order. It means once price gets away from me, if it comes back and hits this, this is the limit by which I want to get in the trade. This is the lowest point where I want to buy it. So I'm waiting for it to get away from me and then come back and hit this. So even though I'm tagging it limit order, I do not put this trade in until my buy stop order triggers. Once this triggers, then you can put this in. So I hope you guys heard me. So how do I put my buy limit order in? I have to wait for a green candle. So after all of this, I need one last real life, I guess, confirmation. And that is I need a green candle to actually be created above all of this. And so now we have the guideline here, and I have my first green candle after the cross and above the guideline. It has to be above the white guideline and after the cross. Here's the first one that was created. If there is no green candle being created, so let's say if I had this situation, you don't do anything. You don't even have to put a buy stop order up here. This is a false signal. Why? Because there's no green candle after the cross. There is one before, but there isn't one after. I need the market or price action to start showing me after all of this confirmation. I need it to start showing me after all of it that it's working. And the only way to verify that everything is actually going up is that I need a green candle. If I were doing the opposite over here, I need to verify everything's going down. So what do I need? I need a red candle after the cross. Until I get that red candle, I don't believe it. I don't believe the indicator. I need a candle. So I wait, and then a candle gets created. Hey, Chris and Jackie, how you guys doing? Yeah, that was a false breakout from the news. Absolutely. So here we go here, the first green candle that was created. So I'm going to put a buy limit order here. And then for those of you who want to know where you should put your stop loss, it would be the previous pivot right here low. The first pivot you see would be an aggressive stop loss. That's the one that could get hit the easiest. Okay, so then what you would do is find another previous pivot low, and then you can make that, let's say, your moderate one. And then for those of you who really want to be safe, go to the next pivot again, make that your conservative one. So that's how you would find your stop losses. Just use the pivots that the indicator already gave you. Use those as your stop losses. Okay, now getting back to this is where I would have put my two orders. Now looking back here, the average person would be thinking to just short, to keep going down, because that's what this picture is kind of looking like. But when you zoom in to the indicator and you have it set to the 3-minute chart, it's saying, no, we're ready to go up right now. So now let's see what happens. We're not in this trade. Remember, we just marked it, but we are in this trade and set it. Okay. All right. So we're in the buy stop order, or we have a buy stop order pending. We have nothing here. We only marked it because we're going to put something here later. And then we put our stop loss here. So now let's see what would have happened had we jumped in this trade around 5 a.m. So it would have gone up from this green candle like we thought, but we didn't put this order in. All right. And the reason why you don't want to put the order in is because you see how if you put the order in, it pulls back. Sometimes it goes up and hits this order, and then it'll pull back and hit the stop loss and then take off and go up. It'll break this one pivot and then take off and go up. So I stopped putting my orders in. You can still do market orders if you want, but I would not suggest an aggressive stop loss if you do a market order here, because it can hit this get you out of the trade and then take off and go it without you. So that's the reason why I don't do it. And sometimes if it's in a sideways range, it'll cross, but then it'll cross again. You see how it crossed right here and then not too soon after it crossed again? So I don't want to be in the trade short like that. I'd rather be in there long term. So to verify that you're going to be in a breakout move, let it actually break out, hit the buy stop, and then if it comes back to your buy limit, you get to get in a second time. You get two positions. It's just bread, butter on your bread. That's it. So the buy stop order will be your bread, and then the buy limit order means you get to put butter on it. It's just extra. All right. So now let's keep going. We're in the trade now. Remember, we are pretending as if we put this order in. So now this order is in. Now I can set this order. So this order right here, I'm going to say that we're actually in this trade. Let me do this. I'm going to put an uptrend thing right here that says we're actually in this trade and we're not in this trade. What is this trade doing? This trade is pending. That's what it's doing. So now we have this trade pending. This was pending, but now we're in it, and this one is just pending. And we placed it because this got triggered now. So prepare for the possibility of it pulling back. So let's keep going. See what would have happened. All right. So our buy stop order would have been green. We would have been good. We'd have been oh. You see? Look how it pulled back perfectly. And all I did was identify the first green candle after the cross. Look how it hit it perfectly, popped up, came back, hit it again. Our stop loss, our aggressive one, hasn't been triggered yet. And then it went right back up to our buy stop order. We would have been in the drawdown on this buy stop order for about from 92 to 79. Wait, what is that? Well, actually from here to here. So you would have been in drawdown 18 pips on that first one, on the buy stop order. All right, and you guys got to get used to drawdown. If you can't stomach drawdown, just get off my channel and just forget about it and go back to work. Because drawdown is part of life. You got to be able to stomach it. It's just what it is. All right, so we would have been in both of these orders now. So now I would have had two trades, and I'd be long. And oh, that's it. This is real time. So this is where we are right now in the market for real. So exit there. And I got in here from the previous setup that we did earlier this morning. So notice it still gave me the same answer about 6-7 hours ago. I had this answer, but nothing happened. It didn't break out. It didn't break out till here. It just went sideways all that time. And it wasn't until this morning that it actually took off. But it still was correct. And then you see how we got two more answers that we would have gotten. And we would have been green right now. We would have been up 42 pips on the first one. And you would have been up 55 pips on the second one. You would have been up a total of 97 pips right now from 5 o'clock this morning till now. You'd have been up almost 100 pips with no labor or mental anguish or stress on yourself, because you wouldn't have did this until you got alerted first. It would have alerted you, and it would have never hit your stop loss. And at this point, that's when you move your stop loss. So right now I'm going to put my stop loss at, there's no good space for it right now, but I got to put something. So let's put 135.92. The reason why I said there's no good place for it right now is because there's no pivot. You always want to wait for a pivot. The only pivot I could possibly see would maybe be this one. This is where I can put my stop loss, but I'm going to leave my stop loss closer to my entry. And the reason why I'm going to do that is because I just want to clear spread. Whatever spread is roughly 2. I'm just going to round it up to 2. So I want to add 4 to this 87, which brings me to 91 actually. So it'll be 135.91. So that's where it would be. And that's where I would protect myself on the that position there. Let me delete this, So this would have been triggered as well. Actually, I'm gonna just leave that on there, and then this here. That way we can just see it for next time. Switch this to it being activated. There we go. We move this over so we can see that right there. See that right there, and lock it in. All right. So the reason why I do double of my spread is because if you only put the actual price, a lot of people like to call it break even. Listen to me carefully. I hate break even strategy, and I'm gonna tell you why. You don't have to hate it. It's not a big deal, but I'm gonna explain something to you. If you're trading to make money, and you know you got to pay to play. So if this thing is green and it went all the way up here and it pulls back, and there's no other pivot lows in here. So if I turn it on, I like to put my stop loss below a pivot. It hasn't pulled back yet, other than down here. So that means I need to keep my stop loss on this trade down here because this is the only pivot I have. Oh, you're welcome, Bookmeister. This is the only pivot that I have. So I end up leaving my stop loss here until it pulls back and gives me a new pivot low. I don't move my stop loss. I leave my stop loss close to my entry. So now I can get rid of this here, and I put my stop loss because it got away from me good enough. I can change my stop loss to this. Now, why did I do 4 pips? Because 2 of the pips are going to get paid to the broker. If this thing comes all the way back and hits our entry, and you have your stop loss at the same price, you still got to pay 2 pips to your broker. So people who call it break even, they're actually not breaking even. They're actually losing money every single time they put their stop loss at the same price as their entry. You're losing spread. You're paying the broker. So you're telling me you're gonna be right, do all that work to be correct on the trend. It goes you're in your favor. It gets all the way up here, 49 pips, and it comes all the way back here. The only protection you want to put is there this price here. Well, guess what? Who paid you for all that time? Did you make any money for the time that you spent in the market going up and coming back down? Where do you get money at from you for your time? The only way to do that is to do what the broker is doing, because the broker is making money off of your time. The broker is saying, hey, you're using my system, you're putting in a trade, I want spread. Well, then you should also pay yourself spread. Pay yourself whatever the broker is getting paid. Don't let the broker walk away and get paid off of you, and you didn't get paid off of you. So whatever I see spread is, I double it. So if spread is 1.7, I round it up to 2, and then I add 4 to my entry. So if my entry was 135.87, I add 4 pips, that's 135.91. Now if price action comes all the way back and hits this, guess what? My broker gets 2 and I get 2. Bingo. Everybody's happy, everybody gets paid. I ain't that happy because I would have rather made 50 pips, but at least I made 2 pips for my time. And I didn't pay somebody else for my time, and I didn't get anything out of it. So this is what I would call uh, a positive stop loss. This is when people hear me say, "Oh, Professor, do you have a stop loss?" Yeah, but I only have a positive one. I don't have a break-even stop loss. I don't have a negative stop loss. I only have a positive stop loss. I focus my attention on positive stop losses. I'm interested in making money, not losing. All right, so this is how I do my stop losses and how I move them. All right, so that's CAD. We do not have an opportunity on CAD right now because it hasn't pulled back. It looks like it will. And so let's see. Let me delete these buy orders now that they've already been satisfied. Let's get rid of some of these stops. And we're going to put an order in right now for CAD now that we're looking at it. So even though we missed this opportunity here, or you guys who weren't in the first one, you missed it, don't worry. We're going to find a new one. How are we going to do that? First off, let's see where dollar CAD is in the big picture of things. So I had mapped this out using P2P earlier. As you can see, P2P says there's demand down here. It says that dollar CAD is in a downtrend, okay? Because this is where it started to short, and this is where it went up from. So it's on its way back down to that. Unfortunately, when it started here, if we would have gotten in here, look how price action came down. Uh, First hit our TP1 right here, pulled back a little bit, came back down, hit our TP2. But the weirdest thing, it came all the way back up to our original sell order. And then back down right here, it hit our TP1 again, hit our TP2 again. I think I just lost the signal. Give me 1 second. My screen just froze. Testing 1, 2, 3. If you guys can let me know if you can hear me again. TradingView just shut down on me all the way altogether. Let me know if you guys can see the chart again. If you're back on, I'm back. All right, so where were we? Let's see here. Before I was so rudely interrupted. I think I was on CAD. Let me check here. Yeah, we were on CAD. So CAD here, and so I was going to show you guys another entry. Let me know if you guys can hear me. TradingView shut down on me for some reason. Just completely closed out on me. Let me see. There we go. All right, cool. So we were looking at before TradingView just shut down on me for some reason. Dollar CAD. We're looking at getting in, and so what happened is the market turned here, and so we had an entry down here, and it already hit. So we have to wait for a new opportunity to come. But what I can say is, so that Dixie, that was an uptrend alert for Dixie. That means this dollar cash should be going higher. So for right now, the only place for an entry on dollar CAD is this one here because it's the only cross that we have. All right. So 135.80 is an order that you guys, if you're not in dollar CAD, this is a pending order that you can place. 135.80 price action may come back to this entry here. When it does, where are we going? Let's figure that out. So that was the 3 minute. Let's go to 30 minutes, see what's on there. Oh, perfect. So look here. I'm going down the time frame. I get to the 30 minute, and what do I see? I see a cross. What are you supposed to do? You're supposed to take your vertical line, put it on the candle that's after the cross. So this is before the cross. So then this is the candle after the cross. So what does that tell me? It tells me that it can pull back up to here. Okay, because that's 30-minute time frame. If I go higher to the 45-minute, notice there's no cross. So the very first crossing I have, and sometimes you may have to play with it. That's why you guys need Pro Plus or Premium. in order to use the indicators and to get all these time frames. So because I noticed that there's the 30-minute it crossed and the 45-minute it did not cross, I can go in between and do like a 40 and see if it crossed, and it didn't. 38, it didn't cross. 36 or 34, there's no cross on the 34-minute. 31-minute, it finally crossed on the 31-minute. If I go to 32, there's no cross. So the 31 and the 30 obviously are the first time frames, and it doesn't matter which one of those. But now that we have this candle, I'm going to set my buy limit order here at 136.20. Whoops. Oh, because it shut me down, I'm not logged in. Ah. All right, give me 1 second. Let me log into my account. Go here and connect here and here. All right, there we go. So we're looking at this here. So I'm already in this trade here, but we have it crossing here on the 30-minute. And now this is the first candle. So we put a buy order at the close price of that candle. And 136.20, gonna buy 136.20. Let's do that. All right, and then where am I going? I'm just gonna go to the opposite of where it last closed. So I'm just gonna stay on the 30-minute. And remember, these limit orders are never for you to jump in. They're setups. So I'm just setting up for it to pull back. I'm going to do an add-on. Oh, can't see nothing over there on the other side. So I'm just going to go to the big picture. There we go. So this is what I was saying. Price action is in a downtrend, but as you can see, they already came down, hit all of our TPs, all the way down to TP3. And when they hit TP3, they turned and they came all the way back. Rather than coming down to demand, the market makers came in and flipped the entire market and took it all the way back up to supply. So price action is not in an uptrend. This is what we call a retracement. When it's respecting trend but pulling back from it, we call it in a big way. That's a retracement. If it's a small one, we call it a pullback. But if it's this, it's a retracement. And unfortunately, these do happen. And so if I were to guess where it's going up to, I would just probably get out at one of these pivots here because we don't have that much more to go. It looks like it's going to short. It looks like it might be coming back to our sell limit order here, or either this one. So whichever one, you just want to stay in the trade until then, but I'd probably get out up here. If we're getting in at 136.20, you can go ahead and get out at 136.50. That'll be 30 pips. That'll be a nice safe move there. But I'll be in this trade until I get alerted that it's turning around, and then that's when I'll get out. The other thing is that the indicator has is if I go down to whatever time frame we were on, I think 3-minute before, or 30-minute. We were on the 30-minute. Here we go. If you're trying to figure out where to get in and where to get out, we also built into Tamasha here. If you go to settings, if we go to settings here, you can hit target price. And if you turn on target price, it'll give you these lines that represent ATR, the average true range. All right, so what this is telling me here is, and I need the average true range. Yeah, that's on here. So the average true range, I'm looking for it. And so if I were to back up, let's see if it gives me an answer to the upside. There's just so much upside potential on this thing. that there's no information. Let's go to a higher time frame. It's too much noise here. There we go. So the next place for a price. So if I look at current price over here, it already hit it. So you see these little flat lines here? These are the areas where you would TP if you were shorting. So you're looking for the ones up top, kind of like these here. And so here it is. It already hit it. So if we were in this trade and we had turned on trade target price, it would have told us to get out of the trade right here. See how it pulled back right at that point? This was a resistance level. And so if you would have caught this trade here with us and you were following the target trade price, then you would have already gotten out the trade right here. Now that we're getting in here, we need a new place to get out. So I went to the 3 hour because everything else was below it. The only thing above it, or the first thing above it, was here. So then this would be a good place to get out, which is perfect because I even have a sell limit order up here at 136.95. So it's saying use that as your TP. And then it's giving you another little higher one up here. So I would just use the 136.95 as the absolute highest for that entry of 136.20 for this entry right here. 136.95 would be the highest. But all in all, I'm just going to stay in the trade until it crosses again on the 3 minutes. See how it's not crossing? Oh, look what it just did. It made some higher take profit opportunities right here. So this will be your take profit wherever this is flat at. And that's already built into Tamasha. You can turn it on or off. It's up to you. Some people use it, some people don't. It's a personal preference. All right, so let's look at a couple of more. Oh, Jackie has a question. Professor, is there a time frame to be able to check where it will turn around? No, there's no specific time frame, and you don't need one. If you want to know when it's going to turn, you just want to. Let's go back up here. So what you want to do, if you want to find a turn, let's do a different chart. I need something that doesn't have any lines on it. Let's do a minor pair. And let's do a minor pair that I'm not in. Let's do Cat Swiss. I'm not in this trade. All right. So the way you know where something is turning, I'm just going to stay on this. Oh my goodness, there's nothing down there? Can't really use that. All right, there's no information on Cat Swiss. So the only information I have on Cat Swiss of where it's going to turn is here. So if I just stayed on let's do a 1 day, the chart that everybody has. So here's a 1 day chart. Let's say you opened up the 1 day chart for Cat Swiss. You want to trade it and you want to see what opportunities you have. And this is all you did. You just turned on Tamasha. You haven't used P2P. You don't know if it's an uptrend or a downtrend. You don't know anything. You're just looking to figure out, hey, where can it turn? You just do the same thing. Find the cross. Now remember, I'd rather you do this on the 15-minute or below. So let's do it on the 1 day like we said first because it's cleaner. So the 1 day says this. It says that unfortunately I got to turn P2P on. It says we have a pivot high, we have a downtrend signal, we have red smooth Heikin-Ashi, we also have downtrend confirmed, and it crossed. So now that it crossed, I take my vertical line, put it on the candle that matches that cross, and then I want to see, is that before or after? So I'm going to zoom in. That is before. Whew, they be trying to get me. So because that candle is before the cross, I need to focus on this next candle here after the cross. It's always the candle after the cross. So what do I do with the candle after the cross? Take my line, put it at the close of that candle, and I mark it as what? A sell order, sell limit order. And I wait for price action to come back to me. Now, the issue is price action's already done it. It already came down, it pivoted, went up, and hit this sell limit order. Came down, pivoted, went up again, hit it a second time, came down. So it's possible we can get a third one. So right now, price action is saying that the CAD Swiss is in more of a short position. It's going to go down some more. And if you're going to get in this trade, 65.80 right now is the best place to jump in. And so I'm going to put a sell here. And I'm going to do 65.80. And I'm just going to pin it. And it's going to trigger whenever it triggers. I'm not going to chase it. But it's coming up there. And then we can get out at wherever we see a current pivot at. So since this is the only pivot low I can see, because there's no more information, I'm just going to use that as my TP. And 64.81 is where I'm going to get out at. And I'll make 1,100 bucks. There we go. Bam. Done with the trade. All I did was I used Tamasha. That was it. And P2P together, really. And I based this information on the 1 day. So based on the 1 day here, you're welcome, Jackie. We found this candle. We put that here, and now we just wait. Now let me do this on a time frame I feel more comfortable with. So let's do the 15-minute chart. Let me get this line off of here. All right. And then I'm going to tag this as 1 day so that we don't confuse it with the next one that we're going to do. What we're going to do is do it on the 15-minute chart and see how close they come to one another, if at all. Same chart, 15-minute. The moment I open it, what do I see? I have both of my indicators on here. I see my pivot high. I have a downtrend signal. I have a downtrend confirmed. That's 3. And my fourth one is the red smooth Heikin-Ashi. And now I just wait for it to cross. It crossed right here. I'm going to take my vertical line, put it on the candle that's nearest the cross. And I can see this one without zooming in. It's after. So perfect. This is the red candle I'm looking for after the cross. So what am I going to do? Take my horizontal ray, snap it on to the close of that candle. And then I'm going to mark that as my sell limit order. This will be the sell limit order, but on the 15-minute chart. All right, so I'm going to go here, get rid of that, and then I'll get rid of this. And I just want to kind of take a look at it. Look what happened. Price action already came down, pivoted, went up. It already hit it. It already went down. So we don't have an opportunity yet. All we can do is wait. But as you can see, we have 2 possibilities. And when you step back and look at both, this is no longer something I would be interested in. It's just too low on the curve. It's easy for this to go back up, and then I'm in a lot of drawdown. So even though it showed me on the 15-minute chart to get in, it already happened. So I'm not interested in holding this. So I'm just going to delete this and just hold this trade up here, and that's it. Because there's just no more information. This is the most recent candles we have, and there's no candles in history. So there's nothing to look at. So this is the best we can come up with. So there you go. If you guys want to trade CAD Swiss, opportunity is here at 65.80. Let me see if I can get the actual. Here it is. That's perfect. It's on the 10-hour chart. Here's the zone. This is an immediate retest pointing to that zone here. So this is the beginning right here of the supply zone. Let me see if I do this. Yep. Yeah, I like that area. So this right here, this green candle, this is supply on the 10 hour. So let me put that on there so I don't forget where I found that 10 hour. Perfect. All right, that's it. So I'm just going to wait for this thing to pull back up here. We have two immediate retests, this one and this one, both pointing to this area. I like the resistance all the way across. That is gorgeous. And so I'm going to take my chances up here. I'm just going to wait. All right. Let's look at Aussie dollar, see if we can find a setup. I'm going to go through all of these and then I'll be done. Any more setups? Let me see. Turn on Tamasha. And as you can see, I just got a red exclamation mark. That just means it timed out. If it does, just switch your time frames back and forth, toggle it, and then it'll reset it. So as you can see, we have our pivot low. We have an uptrend signal. These are the last things we got. Here's our current price. It came from this pivot low here. Where is it going? Going up to that pivot high. And so we have an uptrend signal. We have uptrend confirmed. And we're just waiting to see if there's anything we can do, but we don't have an alert yet. So the last alert we got was this one back here. So if these two cross, if the guideline and the guideline cross, and a green candle is created after the cross, you need to close this trade and get ready to set up for your uptrend. That's what you would do. So right now we don't do anything. There's nothing for us to do on Aussie dollar. So let's go to euro yen. Dollar yen. Dollar yen is still in the green. We're in this trade right here. I need to put my stop loss. See how it pulled back and now it looks like it's about to go up again. And so this pivot here, I would put my positive stop loss under this pivot once it creates it as a pivot. So then my stop loss will be at let's say 146.20. Once it moves and goes back up again some more, I'll change that. Another thing, I have a sell stop order here that's based on this point of control. So I can move that. Since the point of control says it's going to be down from where it crossed here, I can move my sell stop order up so that it's just under that. So I'll do 146 even. How about that? 146. I don't need to wait for it to go way down there. I can do it earlier. So that means now I'm only 12 pips away from my original order. And if I want this to flip over and keep shorting, then I could, double this or whatever and make it a short, which I think I might do right now. So if price action breaks below this and breaks below this point of control, we should anticipate it continuing to short from 146. And then you could just get out maybe at this pivot right here, 145.71. Make a quick scalp. That'll be a good 28 pips or so. That's a nice day. But it hasn't crossed yet. It gave me the pivot high. It gave me the downtrend signal. It's giving me downtrend confirmed, but it's just now starting to give me a confirmation candle. So I'm not going to get out of this trade. Now, another thing I can do is I can protect myself with a positive stop loss. Like I told you guys, whatever the spread is, this is 2. So I'm going to add 4 to this one as well. So my stop loss will be 4 plus 12. That's 16. So 146, 16. And that's my stop loss a positive stop loss. Okay. So not only do I have a positive stop loss, but then I also have my sell stop order. I don't need to double it anymore because I don't need to reverse the first one. So I can go back and just switch this to a regular, because I'll be out of this trade by the time it gets down here. I don't want to be in a double position. I want to be in just a standard lot. There we go. Now I'm all protected. And if it does hit this, fine. I make 27 bucks. And then whatever the indicator tells me to do, I'm just going to do that. It might tell me to short. So then I'll just get ready to short. Or I don't have to get ready. I'm already ready here. All right. The other option we have is we can put let me delete this. And I'm going to go ahead and do it actually. We can put a buy stop order here at 146.63 in case it continues the uptrend. But let me check the charts here. Oh, it's on its way possibly to this resistance level. So 148.50 is what I would say. All right, so this trade up to 148.50. Look at what they're doing already. Already pulling back. And if they hit it, fine. We'll just do another setup. But 146.63. And 148.50. I forgot to put that in there. All right, so now we're good. So I'm already in this trade. If it pulls back here, I'm going to make 27 bucks. If it keeps shorting, I'll be in this sell order here, and then I'll get out down here, 145.72. Let me set that. What the heck? Oh, I had it too low. 145.72. There we go. Actually, let's do 73 because that's below the wick. I want to get out before that wick. There we go. So 145.73. If it hits this, we're just going to get out at that wick. And if it hits this, we're going to go up to 148.50. So you guys can see I'm all set up and good to go on dollar yen. All right, so we did dollar CAD, we did Aussie dollar, we did dollar yen. Let's do pound dollar. What do we have here? For pound dollar, we're still in the green. We got in on a short here. It told us it was this candle here. So you guys still have an opportunity to jump in on a short at 125. What is it saying? Hold on. Let me delete this. Vertical line. That's not the candle. It's this one here. So then we're going to put a order here to sell. And it's already right there. So if you want to do a market order or something, so 125.82, let's do sell 125.80. Let's make it work a little bit. There we go. And we can just get out here at the pivot. Now let's turn on the trade target price and see what it says. All right, so it doesn't have anything for the downside. It's starting to turn already. But for the downside, it's pretty similar. It's this right here, 125.49. And I have this pivot here at 125.48. So it's good. So this price right here. So you can trade from here to here. That'll make you another 32 pips or so. There we go. We're in the trade already. You guys saw that? It already activated. I hope you put the trade in. Hope you're profiting with the professor. All right, so that trade just activated. It got added to here. Remember, it said 300. Now it says 400. That's my fourth trade I have on this pair. And because it's Friday, I think I'm going to get out here on everything. All right. Kiwi dollar. Let's get another one. I got 6 pair trades on this one. I was shorting. It's just fighting me. It don't want to short at all. This was the last short that we did, 5,900. We also did a 5,905, looks like. So I'm waiting for this thing to turn around. It's still showing downside. This hasn't crossed yet. And even if it does cross, remember, we got to have a green candle afterwards. You don't make any moves until a green candle starts getting created above the cross. So because I only see red being created, and the cross is going to happen in about a minute and a half, and if I don't start seeing some green candles, I'm just going to hold my short position because that means this is a false uptrend signal. All right, so going to euro dollar. Same thing here. I'm expecting it to short. This is my second short position I'm in. It's already at a minor resistance level that we identified. And this is where we put our sell limit order in. And so we already got in at 107.88. We're just waiting. If any of you just got on, you can put your order in at 107.79. If you want to do a sell stop order, that's fine. You can do that as well. You're welcome, Jackie. Jackie says, Professor, how do you know which pairs to trade? Are these your favorite pairs to trade? I don't have a favorite pair other than this. Whichever ones have the most liquidity, high liquidity. People always talk about volume, but volume doesn't matter as much as liquidity because liquidity is based on volume. So volume is the amount of orders that are ready to trade, that are just sitting there. So that is a good sign. Having a lot of orders sitting there, that's volume. Things are building up. Lots of positions there. But liquidity means lots of people are buying back and forth all of that volume. So just because you have a lot of volume sitting there doesn't mean something's going to happen with it. You need the volume to move. And so liquidity is the movement of volume. And so the highest liquidity happens to be all of the major pairs in Forex. So Aussie dollar, Euro dollar, pound dollar, Kiwi dollar, dollar CAD, dollar yen, and dollar Swiss. Those are all the most liquid pairs. Those are all the pairs I have set up. And then I even have gold and silver in here. So that's what I focus on. And the reason why I focus on those is because they just move the most. If you trade the miners, you're going to have less movement, but it's also going to cost you less money. Now, the issue with it is you could have another one, which is called volatility. You want to trade the liquid pairs. So I'm going to show you guys something up here. These are important words. So there's volume. And just think of volume as these are orders that are, ready to go. And then liquidity. This is just you're easily buying and selling all of that volume. Okay. So imagine you're at a clothing store and the clothing store is stacked with a bunch of clothes. It is packed and it's ready to go. Well, that's great. But having a packed store with a bunch of clothes ain't gonna make you no money. That's volume. Volume is a bunch of orders sitting there ready to go. So people always focus on that, but volume does nothing other than say there's a bunch of orders there. It doesn't tell you they're gonna move. What tells you it moves is if it's liquidity. Liquidity is how easily can a person buy and sell it. People are not interested in buying something that they cannot sell because until they sell it, they can't make money. Buying something and holding it doesn't make you any money. Like you hear people say, buy and hold, just hold, hold, hold. Well, when are you going to make money? You can't make money holding a trade. You can only make money closing it. You have to let it go. It's the only way to make money. So, um, volume, I'm not interested in just having a bunch of orders sit there. I need some orders that will move. And so that's what that does. But there's one more word I want to throw in here, and that's this word. After liquidity, there's another word. There's volatility. And so volatility talks about price swings. What does that mean? It means this. Dollar CAD is, let's say if the price swing on the 3-minute chart is 67 pips. Okay, you're basically just saying that that's how volatile it is. It's like, what is the space between support and resistance? That's what, if I were to say, price swings are. It's the space between support and resistance. They call it price swings. Okay, that's volatility. Where do you see volatility at? You see it in pairs or instruments that do not have the easeability, I should say, if I could use that as a word, the ability to easily trade in and out because the prices are not there. There's a lot of volume, but the prices are far away. So let's say if you're in Bitcoin, for instance, and Bitcoin is like, okay, it's a heavy volume. There's a lot of orders sitting out there, but all of the buyers are down here at, I'm gonna just make up a number, at 13,000. And then all the sellers are way up here at 25,000. Well, that's a huge swing. That means a big whale is going to have to come in at 13,000, the bottom, and add so many orders that he pushes it all the way up to whatever number I said, 20 something thousand. That's the swing. That doesn't have a lot of liquidity. People don't like trading pairs like that when you have heavy volume, but the volume is not equally spread out with a bunch of orders all over the place. So major pairs have great volume, but that volume is spread out. It's kind of like going to a clothing store and you have all types of clothes to choose from. You have bottoms, you have tops, pants, shorts, underwear, accessories. That's a nice spread out store. Who wants to go to a store and what you're looking for isn't there? They ran out of your size, or they ran out of that top, ran out of that accessory. That's what it's like when you have volatility, like a lot of volatility. You don't want volatility, you want liquidity. Volatility does mean movement, but you don't want major movement. You just want normal movement. So normal movement is liquidity. That's why you hear some people say, "Oh, I don't want to trade that pair. It's too volatile." It means it swings too hard. Why? Because the liquidity is low. There's not a lot of people easily buying and selling. They're far away. All the buyers and the sellers are not in the same area as one another. And so focus, focus, focus. You can easily Google that. Just Google Forex pairs with the highest liquidity, but I'll save you some time. They've already mapped it out. The highest liquidity is the major pairs, the minor pairs, they have volume plus liquidity. And then the exotic pairs only have volume and volatility. They do not have liquidity because there's not enough people trading them. So will it move? Absolutely. But when it moves, it's going to move hard. And you better be facing the right direction. So for instance, I sometimes trade the pound ZAR, which happens to be the pound against the African Rand, or I'll trade the dollar against the African Rand. But that thing will swing 3,000 pips in 5 minutes. and you better be facing the right way. And the reason why it's swinging that hard is because that's where the next buyer or seller is. It's 3,000 pips away. And so people don't like trading those because if they're wrong, they're wrong. And so just focus on the pairs that have high liquidity, or the ones I would say the most or the most riskiest I would say for you to trade if you're just now starting. Just stick with the majors and the minors. So the minors would be all the yen pairs, the cross pairs they call it, I think sometimes. And that would be my answer. That's how you know what pair to trade. But it doesn't matter. I'll do an example here. Let's go to so you guys see I have it all listed out. I have my Forex exotics, my inverse correlations, my majors, my minors. So I'm going to go to exotics here, and you can see there's 45 of them. And we have Aussie and the Hong Kong dollar, Aussie and the Singapore dollar. We have the Mexican peso, the African rand, the Czechoslovakian clone. We have the krona here, Hong Kong dollar. So quite a bit. All right, so we'll just pick. I'll show you guys the one. Oh, I'm in the pound czar. I'm probably negative now because I have not been watching that trade. Oh, I'm not. I'm positive. Oh, look at that. That boy hit that thing sniper. Up 600. Didn't even know. I'm just in this thing like a crazy madman. Oh, man, look at that. That was perfect. Look at that entry. All right. So, again, we're on the pound czar. And look, it doesn't matter what pair you're on. So when you said what pair or what time frame, none of that matters. If I were to trade this, I'm already in this trade here. I would do a short, so you guys can actually do a market order to go short. Where would I get out at? This is easy since it's already crossed here. Here's the first green candle after the cross. And I can just put a line. Where is it? Right. That's the first green candle after the cross. I'll just make that my TP. And that's it. 22.90. That says 98. Let's do 99. Glad I looked at this. Jeez. Thank you, Lord. 22.99. Bam. All right. If you guys want to get in this trade, you can do a market order short. On pound czar, you're trading the pound against the African rand. And how many pips is this here? Look at that. 6,000 pips. That's what I'm talking about. See? You make a lot of money on these things. It's a 6,000 pip run. Can you repeat what the major pairs are you previously mentioned, please? And thank you. I can do better than that, Jackie. I can share with you my chart. If you guys have TradingView, here are my charts here. Here are the sessions. I have them all divided. I even have it divided by exotics, majors, and minors. So it's up to you, however you want it. I can share my list with you guys. So if I want to break it down by European session, I have a European list. These are all the pairs you can trade for the European session. All of these are also listed in Daily Bread. If you guys notice, Lady Ward, she posts every time the sessions change, the time frame changes, you'll see in our Daily Bread group. So if you guys are not in our Daily Bread group, here it is. Just go to my profile, click on here. It's a free signals group. We give away free trades all day long. All right. So when you go to that group there, you'll see in there that she's Lady Ward here, and she. So you see how pound dollar pivot low uptrend signal here. Don't have any green candles. Cross. It needs to be above. It said pound, hit pound dollar again. You guys are delayed from me. Don't move, chart.